Please read this disclaimer carefully before proceeding further. Hello traders, let's look at oil and gas. A lot of you have actually requested a full analysis on US oil and natural gas. I've already posted them onto my TradingView channel, but let me give you a brief idea on how to analyze them while I do that in this video. Okay, on US oil, what I posted previously on TradingView is this. I'm expecting market to move higher from here. Actually, this was posted 1 week ago, so there was a little period of downward movement, but now the oil has started to move upwards, and I'm expecting it to move to 49.96, near about 50 level or so, $50 or so. And if it keeps on moving upwards, then it can come to 53, 52, 53 level where this 200 moving average is. And if it keeps on moving even further, then we are looking for near about 58. So let me actually put those lines in there. So I'm expecting it to come here, and then in like an extreme case, it can come to 74 level as well. So that's what we have. Now, how do we find this? First of all, we can see that market is creating a W pattern, and if it is creating a W pattern, then we should be able to measure it. And if we measure it, we can see that one of the reasons where the market may actually try to come and take a break or reverse or create a little bit of correction is in this FCP zone. FCP zone is where Fibonacci confluence patterns are available. So we have one Fibonacci here, but there are multiple Fibonacci levels, multiple Fibonacci which I've drawn in my original analysis. They're also completing around here. So that is what is giving us FCP zone, and that's why we have these levels as very important levels. Now, by saying that, we always be looking for bearish and bullish opportunities. So even though the market can actually go upwards, there is still a chance that it can come down from where it is right now to 43 before starts to move back up into this FCP zone. And if the market actually breaks through this 53.15, then we are looking for 58.12, and then it will obviously have to go through this the top structure before it can reach 74 level or so. But you can expect a lot of reaction, or maybe consolidation around this area, around $50 to $52, $53. So that's what we have on US dollar. Sorry, not US dollar, but US oil. Okay, if you enjoyed this analysis, make sure you hit the like button and share it with other traders as well. On natural gas, somebody actually asked me to do this in our group. And on natural gas, if I show you the monthly time frame, right now it is actually reacting from this water moving average, and now it is falling down. So obviously the next thing which is in sight is around this level, which is 2.3 level, or around 2.28 level, so somewhere around here. So that's our next level if it continues to fall. But because we are looking at monthly level, monthly time frame, it may not happen almost immediately. You see this bullish move, right, that was actually interrupted by this candle, right, and that actually makes a little bit of weaker bullish trend. So if the market starts to find good bearish strength, then it can definitely reach this particular level. If I go to the weekly time frame, right now it is getting supported by water cluster moving average, and it has also been filling most of the gaps that it has left. So here it has been filling all the gaps. There is another gap here at around 1.9 level here. You see, gaps may or may not get filled, right, all the time. There are so many gaps in this market. Maybe it's just the feed that I'm looking at, but you see, if that particular market has been filling gaps in past, there are good chances that it can fill the gaps again. It's never guaranteed, and it may take several days to weeks to months or even years before it can come down to fill this gap. So do not just rely on that. Okay, but right now what we can see that we have a W pattern here, and because towards the end of the W pattern the market falls, it has been falling. And now if I go to the daily time frame, what do I see? This is the analysis that I posted on TradingView on your request. So we have potential head and shoulders forming here, but as I said, there is a gap here, but we have a gap somewhere around here as well, right? 1.9 level, and then we have a gap here at the 1.56. So it may or may not get filled because it depends on the behavior of this market. But what we can see that, as I posted this, the next day market actually went to a level of 2.614 and fell down again. If I show you that, it went to that level, right into that level, and fell back. And the reason behind that is, again, that water moving average, the market tried to go over it, but it fell down, and this is what we were expecting. At all of these levels, market may actually experience support and resistance. So if you are looking for any kind of movement, then you need to make sure that you are managing your positions around these levels. If you want to find new opportunities to enter long or short, then you should look for a confirmation around these levels as well. Ultimately, I'm expecting market to come down to this FCP zone, which is also supported by 200 moving average here, and 61.8 Fibonacci level, giving us a very good FCP zone. So I'm expecting more downside rather than upside, but as I said, we always plan for both sides. So if the market starts to move upwards and it goes beyond 2.614, then I'll look for a long position to 2.698 and then continue to 2.826, and if that is also broken, then I'll look for this particular zone. However, if 2.479 is broken, then I'm looking for 2.343, and if that is broken, then obviously I'm looking for this zone, and from this zone I will also look for back into this and then to the next level. So, and I will continue doing that as the market goes up. So right now it is being supported by 50%, and the next one is going to be 61.8, and the reason why it actually fell sharply from there is because this zone, this particular level was 38.2, which is an important level. When the market is breaking through an important Fibonacci level which was already tested, right, there was not much of strength left in this level. It was already tested. When market wants to break through that level, it actually exerts a lot of strength in there, a lot of strength, and it actually creates huge candles like this. This is what we call as breakout candles. So it creates those breakout candles to get away from that zone or from that level as soon as possible. It broke through that, then this level became a resistance. Now market may actually create a W pattern here, which basically, that's what I was saying, if 2.614 is broken, then only I will go for a long, otherwise I'll stay short and I'll look for a break of 2.479. so that is what my plan and analysis is on the natural gas. So if you enjoyed this free education and analysis of US oil and natural gas, make sure that you hit the like button, subscribe to the channel, and share it with other traders and trading communities, and put a comment at the bottom of this video to let me know what you think about this analysis and what is your opinion, what is your own analysis on either of these two. I'll see you in the next one. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to vikinsa.com, and under training section you'll be able to see and submit this form.